Welcome everyone to today's Title Topics webinar. These are Alta's free presentations that we offer every month on issues important to title professionals. I'm Jeremy Yowie, Alta's Vice President of Communications, and today we've got a great program lined up on the transforming e-mortgage ecosystem and how your company can benefit by providing a more efficient transaction for your customers. Wanted to note an interesting article that I saw earlier this week about Wells Fargo's plans to roll out its digital mortgage platform in 2018. And since Quicken Loans' unveiling of its Rocket Mortgage about a year and a half ago, it's been interesting to see the several other lenders develop their own versions of a digital mortgage. So I'm sure today's webinar will be extremely timely and informative in helping you understand the e-mortgage landscape today and where it's going in the future. Before starting, I need to touch on a few housekeeping items. A copy of today's presentation was emailed earlier today to all registrants. You can also download the PDF from the GoToWebinar window pane. If you didn't receive my email earlier today, if some of you just registered in the past hour, you can shoot me an email and I will send you a copy of the presentation after the webinar, and my email is jyohe@alta.org. That's jyohe@alta.org. And we've also provided some additional material from Freddie Mac's team that addresses e-mortgage laws and requirements, and you can also download that from the GoToWebinar window. All participant lines are muted for today's presentation. If at any time you have a question, please submit them through the question box. We'll hold some time for Q&A at the end of the presentation. As an added benefit, today's presentation is being recorded. After the file is processed, the recording will be available on Alta's website. That will be at alta.org/title topics. Again, that's alta.org/title topics. And you'll also find all of our previous webinars archived there. I need to thank Fidelity National Title Group for sponsoring our Title Topics webinars this year. Their support allows us to continue providing these educational opportunities free of charge. And with that out of the way, let me briefly introduce today's speakers. Joining us are Raj Penaganda of Freddie Mac and Raj Jagani of Fannie Mae. Raj Penaganda is the e-mortgage program manager at Freddie Mac. He is responsible for managing and improving competitiveness of Freddie Mac's e-mortgage program. And Raj Jagani is a product development manager in the e-mortgage team at Fannie Mae. He is responsible for managing several of the day-to-day operations related to Fannie's eVault and the overall business process related to e-mortgage. With that, I'll turn the presentation over to Raj Jagani.
Excellent. Thank you so much, Jeremy. My name is Raj Jagani, and I work in the e-mortgage team at Fannie Mae. I would like to begin by thanking Alta and its members to provide us the opportunity to talk about e-closings today. I would like to first take a moment and thank my team members, Rita Mian and Mike Cafferkey, for helping us put the presentation together. We have designed this presentation with a focus on the title and settlement provider community. We hope that you'll find it informative and transformative and encourage you to explore e-closings. Before we dive into the subject, let's look at today's agenda. I'll be briefly talking about some foundational definitions from the e-mortgage world. Then I'll talk about the MERS e-registry and its role in the e-space. I'll spend some time to discuss the e-closing process flow and then some common myths that we would like to debunk. Then my colleague from Raj from Freddie Mac will talk about the benefits of e-closing, the current industry landscape, and then next steps for the settlement provider community. As Jeremy mentioned earlier, we will finally end with Q&A. So if you have any questions, please send them over to Jeremy and we will address them at the end. Okay, let's begin. So we're gonna tackle some of the basic definitions with eMortgage. We're gonna start at the top and go counterclockwise so you can follow along with me. An electronic promissory note. Basically, a promissory note is a financial legal instrument in which the borrower promises to pay the loan amount agreed upon terms. When this promissory note is created, executed, that is signed, transferred, and ultimately stored electronically, it's called an e-mortgage, also e-note. So an e-closing is an electronic closing that takes place when closing documents are signed electronically. So just a few concepts about just to keep in mind about e-closing. Not all documents may need to be signed electronically. In fact, some documents may be printed and signed on paper, while others are signed electronically. This is sometimes known as hybrid closing. Okay, give me one sec. Where some of the documents are traditionally wet signed on paper. An important distinction to remember is that e-closing produces an e-mortgage only if the promissory note is signed electronically. Let's talk about e-recording. So e-recording is electronic registration of the security instrument and other recordable documents with the county recorder or similar jurisdictional authority. E-recording does not require the security instrument to be electronically executed. A county often records a scanned image of the paper security instrument when it e-records. And finally, come to e-notarization. There's a lot going on in this space, but basically an electronic notarization takes place in the physical presence of a notary when a notary affixes an electronic signature and a notary seal to a digital document in a secure environment. So that's those are the basic definitions. You may have heard them before. Just to recap, so the MERS e-registry. So let's just talk about that. So MERS e-registry. More people are familiar with the MERS residential system, in which the mortgages are recorded in the name of MERS as the original mortgagee. The e-registry is slightly different, so let's talk about a few differences. As you know, there can be multiple copies of an electronic document. You know, once you have an electronic document created, you can make multiple copies of it. But with a promissory note, it's really important to know which party has the legal and enforceable copy. So MERS e-registry is the industry utility to identify the note holder or controller and custodian or location of the authoritative copy of the registered e-note. So MERS is the industry utility to identify who is the legal owner of that note, copy of that note. The other copies are deemed, just regular copies of the note and not the authoritative copy. So at any given time, there's only one controller of the note. Another important aspect to remember is that MERS does not store copies of the notes. They're stored in applications called e-vaults, and they're secure. And the e-vault to MERS network enables a secure communication and allows the industry to scale better, as it doesn't require B2B connections individually between e-vaults. So every new e-vault that needs to be brought into this e-mortgage space can connect directly to MERS and be able to communicate, and sell notes to any party that's within the ecosystem. I won't go over the other details that are on here, but those were the main topics that we wanted to hit on the MERS e-registry. One other important fact that we wanted to highlight here is that the GSEs do require that the lenders register their e-notes on the MERS e-registry within 24 hours of closing. So this is something to keep in mind. Right. Let's look at the e-closing process flow. So the e-closing process flow is pretty simple. It begins with the lenders working in conjunction with the settlement agents to upload and create documents for closing and load it up into a e-closing platform. Now, as I mentioned earlier, all of the documents do not need to be electronic, so some may take a paper route and some may be electronic. The note is a special electronic document. It follows the MISMO SmartDoc 1.02 format today. It's a specific type of format that's used for the e-notes. That's a requirement at the time. We are working on the next generation SmartDoc that will be released by Q4 of this year. This will be MISMO version 3.4 for those who are following MISMO standards. We'll be working with the industry to implement it in practice in 2018. So there's a little bit of time that we have provided so that the industry can catch up and implement this new SmartDoc format. Okay. So the e-note will be closed electronically, and then it'll be stored in the lender's e-vault. While the other documents, if they are permissible, for example, if they can be recorded electronically in a jurisdiction that's allowing it to be recorded electronically, those will be loaded up into an e-recording platform and will follow the path that way. The e-note specifically lands in an e-vault immediately after the closing, and then the e-vault is used for registering the note with MERS right away within 24 hours, as I mentioned earlier. And then the lender's e-vault is used for any subsequent transactions with other investors. And the way an e-vault will communicate, so via APIs, the lender's e-vaults will make delivery and transfer API calls to MERS that'll deliver the note and also do the transfers to other parties. So that's in totality. This is how a e-note will travel from a closing platform over to the lender's e-vault, and then through the MERS registry can be delivered to other parties. Okay. Let's talk about a few common myths. There are certain myths about the e-mortgage space. So we wanted to take the moment to dispel some of the myths so that we can shed some light on what the truth is and in practice. So there is a myth about e-sign disclosures needing to be re-signed at e-closing. What we wanted to highlight here is that the closing disclosures and other closing documents can be signed in advance of closing, which can simplify the closing ceremony and be of great benefit to the borrower as well at the time of closing. So it reduces the time to close because they're familiar with the documents beforehand for closing. And some of the documents may be signed earlier as well. You could check with your lenders to see if they have any specific requirements about needing to sign specific documents at closing. Well, in general, many of the documents can be signed early. Okay. So completely paperless closings are not feasible. That's another myth that we had heard. So that's really not true. Depending on the states and jurisdictions, they are completely paperless. They could be completely paperless, and so we have seen completely paperless closings in the space. So another myth that we have is not all states have laws to support use of electronic signatures. Exactly the opposite is true. All 50 states have adopted some form of e-sign statute or law. Furthermore, GSEs do not require any approval for submitting electronic signatures on documents. For most documents, except the e-note does require permission from GSEs to deal with e-notes, because there are some technology, underlying technology reviews that we would like to perform before accepting e-notes from parties. So we do have a review process for that, but it's pretty simple to follow, and it's to protect the integrity of the entire system. Another myth that we have is that there's no lender demand for E, and my colleague Raj P from Freddie Mac will actually go over some of the current industry landscape, but exactly the opposite is true, where more lenders are interested and are onboarding rapidly with us to deliver e-mortgages. So there's a lot of demand in all aspects. So we have, warehouse banks looking into this. We got regular lenders looking into this, starting, their retail space, their correspondent channels. There's a lot of movement and a lot of interest in this space for delivering e-mortgages. That's the way to go. And then finally, to introduce the last myth, I want to hand it off to Raj P from Freddie Mac. GSEs, the myth is that the GSEs have very different e-mortgage policies. And Raj P, would you want to start over and explain the reality?
Yeah, thank you, Raj, and good afternoon to you all. And before I begin, I want to thank Jeremy and Alta for this opportunity to talk to your members. So this regarding this myth, which a lot of people, especially when they begin exploring e-mortgages, when they talk to us, they come to us and tell, hey, we heard that we need to have 2 different processes in place for delivering to GSEs. Can you tell us what the differences are? And my response to them has been, and this is the fact, which is the requirements for GSE delivery, the origination and servicing of e-mortgages are very well aligned. And in fact, we began working jointly in 2016. But even before we began working jointly, the policies were aligned very well on all major items. And over the last 1.5 years, we worked very closely to compare policies side by side and to try to identify opportunities where we could align. So the GSE policies are now much more aligned than those were before, before 2016, I would say. So there are some minor procedural differences in areas such as the post-closing corrections process. Freddie Mac, as an example, has designed the affidavit to be used in the process. Fannie Mae does not have a affidavit designed, but Fannie Mae does not prohibit sellers from using that affidavit that we designed. So the impact to the industry really is minimal, if at all any, in these procedural differences. So I think the key message I want to really provide is GSE requirements are very well aligned. There may be some minor procedural differences which we'll continue to explore and try to work towards, or even a greater alignment than what we currently have. But the goal from GSEs is always to make sure that the policies and procedures are as similar as possible for the industry, so that they don't have to have 2 different processes in place to deliver to GSEs. So let me move on to the next slide. Raj, can you navigate to the next slide, please? Thank you. Thank you. So, as Raj mentioned, we have seen significant interest in the last few months from our sellers. in both e-closings and e-mortgages. As Raj mentioned, we have some sellers that are doing hybrid e-closings where some documents are still being papered out and getting signed, but the other documents are electronically signed. And some lenders have gone the full e-closing route, meaning full paperless e-closing route that includes electronic note as well. And so when what we are hearing from the sellers is that they are driven by a combination of customer experience, operational, financial efficiencies, and risk mitigation benefits that they see in the process. And when we didn't really necessarily rank these, we didn't necessarily do any kind of survey, but more often than not, what we hear is that the number one reason why they are switching to e-closing process and probably delivering e-mortgages is the customer experience. So in a typical e-closing process, borrowers have access to closing documents much ahead of the time compared to a traditional paper closing process, and because of which borrowers have more time to review documents. They can ask any questions. They can be well prepared. And as Raj was mentioning, there are some implementations out there where lenders are allowing the borrowers to sign some disclosures ahead of the closing day. So the number of documents that they need to sign on the closing table is comparatively less when compared to the paper closing process, right? So because of those reasons, the closing can be much faster. And the other key factor that is driving the positive customer experience is, if you think about your experiences with the other financial products and services. Like recently, I went through a auto loan. Then recently I also paid off an auto loan. In both cases, the loan I took, was completely electronically done. I signed all documents electronically, and then the lien release that happened for my paid off auto loan also happened electronically. So a lot of transactions are happening electronically. Think about mobile deposits and online banking. So a lot of transactions are happening online. So the e-closing process experience is in line with those experiences that customers have in other products and services. From a closing agent standpoint, and some of these benefits apply to lenders as well, because documents are delivered electronically and received electronically. The e-closing process offers several efficiencies from a process and financial perspective. To start with, the document processing and handling costs are greatly reduced because you really don't have to ship back and forth documents. It's all done electronically between systems. And then signed closing documents are available to the lenders immediately in the e-closing room after the closing ceremony is complete, as opposed to having a closing agent or a title agent send those documents through mail, FedEx, UPS to lender, that the lender receives next day or two, right? So that delay is definitely reduced greatly with the e-closing process. And then as far as the misplacing and or sending incorrect documents to lenders, that risk again is greatly reduced because there is no assembling and shipping of closing documents involved in the process. And because it is possible to build system rules in the e-closing room to ensure that all the required places where a document needs to be signed are indeed signed, the risk of missing signatures is greatly minimized. And within the whole process, because of the electronic audit trail, you could pretty much capture every event that occurs, right from the pre-closing stage all the way through, closing, and then so that makes it much easier to prove compliance with the regulatory requirements. And for those lenders that have gone the full paperless route and have included e-note in the process, because the promissory note can be delivered electronically to GSEs, and certification process, which is a vital step that need to be completed before GSEs fund the loan, because that process can be automated, the GSE fundings of e-notes can be much faster than paper notes. And even a day or two difference in terms of funding can be big deal when you look at thousands of loans a lender may originate, especially if they use warehouse line. So even if they can cut down 1 or 2 days of warehouse line interest, that's a huge financial impact to them. And for people, for lenders that sell for cash, even if we could fund the loan 1 or 2 days early, they have the cash with them 1 or 2 days early, and that's a big deal for them, as far as their liquidity is concerned. And from warehouse lender standpoint, because they receive the electronic note, through the Mercy registry delivery process, much quicker than paper process, they have their collateral with them immediately, and also the risk of losing a note is greatly reduced. And similar benefits are there for servicing. And as some of you may be able to recall, at the height of foreclosure crisis, there were a number of foreclosures postponed by servicers because they could not find notes. So they had to go and prepare the last note affidavits, and that process can be time consuming, and then that costs money definitely. And there are some investor penalties for servicers if there is a delay in the foreclosure that is caused by servicer error. So a lot of those things can be greatly minimized. The probability of those can be greatly minimized with the e-notes, and that can have a huge financial impact for servicers as well. So I mean, as I was going through this, I'm sure you must be wondering, if this process is such a wonderful process and there are so many benefits, why is the adoption low, right? Hey, Raj, can we move to the next slide, please? Okay, so while there are a lot of benefits, and one would think that by this time we would have seen more and more lenders adopting e-mortgages and e-closings. But the reality is, while the concept has been out there for more than a decade, the adoption has been low. But we believe that is finally changing, because we now see that all the required pieces to enable e-closings and e-mortgages are shaping up very nicely. So if you think about the full process, right? Let me start with electronic notarization, because that's a piece that is being talked about quite a bit recently. So the capability to, or ability to electronically notarize closing documents is a key piece, for full paperless closing process, right? And there are number of states that currently have electronic notarization process and procedures established. And recently, we have Texas, Nevada, and Ohio all approved remote e-notarization bills, and there are bills pending in several other states like Georgia, Missouri, Oklahoma, Nebraska, and there are several other states. I'm sure I'm missing some of those, but the point I'm trying to drive here is that the adoption of e-notarization, whether it's face-to-face notarization or remote e-notarization, is definitely growing in acceptance, and more states are definitely working on bills to implement this process. And from a recording perspective, right? The adoption of e-recording is definitely growing. We have more than 1,600 counties that currently are e-recording enabled, which cover I would say approximately 80% of the country's population. So most of the population centers are e-recording enabled. Some may be able to accept the vetting signed security instruments that are scanned. Some may be able to accept the full electronic document that was created electronically, signed electronically, and notarized electronically. But regardless of which model they support, the fact is that we have now more than 1,600 counties that are e-recording enabled. And I was in a conference a few months back in North Carolina State. Most of the population lives in Mecklenburg County and Wake County, Raleigh-Durham area, and the Charlotte-Mecklenburg area. And I was talking to some of those recorders, and they were saying that the percentage of the documents that they e-record is growing, constantly, and they record currently approximately 40 to 50% of all the recordings, through electronic means. So that's really huge in terms of the acceptance and adoption of e-recording. From the e-signature acceptance perspective, you already know that Freddie Mac and Fannie Mae both accept e-signatures on all documents, including electronic note. And VA definitely announced back in 2014 that they do accept e-signatures on all documents. And FHA does the same, except that they are currently not accepting the electronic note. So that's the only exception they have. But otherwise, most of the other closing documents can be definitely electronically signed, even if it is a FHA loan. So from warehouse lending standpoint, which is essential for non-bank mortgage lenders, that availability is growing too. So when we began this effort jointly with Fannie Mae last year, we had no warehouse lenders that are ready to provide warehouse line. And now we have 9 providers, and I'm sure more will join very soon, that are ready to provide warehouse line for e-notes. So that's really huge. I mean, if you think about the availability, we have, major warehouse lenders like Texas Capital Bank, Santander, Merchants Bank of Indiana, all ready to provide warehouse line for e-notes. So that's really good news for non-bank mortgage lenders that really need warehouse line to fund their e-notes. And from a servicing standpoint, a lot of servicers use sub-servicers, and we definitely have seen great progress in that space. We have LoanCare, Dovermail, and Senlar. All major sub-servicers are now ready to sub-service e-notes. That's really big news. And to help with the sub-servicing of e-notes, Freddie Mac and Fannie Mae in 2016 provided some flexible requirements as far as the eVault setup is concerned. So we both have started allowing sub-servicers to rely upon the servicer's eVault to perform the e-registry updates that are essential for the e-note servicing. So I think that definitely has opened up door for more adoption in the sub-servicing space. And in the last 6 months, we have heard from a couple of document custodians that they are working on setting up eVault. And that's really good news because, currently Freddie Mac and Fannie Mae are acting as e-note custodians because there is no document custodian that is yet set up to support e-notes. And, the fact that now we have a couple of major document custodians looking into setting up eVaults and, support e-note custody, that's definitely going to provide more options for industry as far as e-note custody is concerned. And from technology standpoint, if for lenders looking into implementing e-closing solutions or e-mortgage solutions, there are several off-the-shelf solutions available in the marketplace that are offered in a model called software as a service model, which means it's pretty much like a plug-and-play model as opposed to having to purchase a license and having to implement in the lender's network. So that model definitely makes implementation of these systems and processes much more faster and much more easier. And then GSEs have been working very closely over the last few months to simplify the e-note format. And why is that a big deal? It is a big deal because we heard through the survey we conducted last year that the format of e-note that currently used by industry is very complex, and the implementation guidance we have provided is limited. So the implementation of the overall e-note itself is very cumbersome for most of the technology vendors as well as the lenders. So based on that feedback, we have been working very actively with industry over the last few months to simplify the format, trying to move it into the latest MISMO data standards, as well as support the PDF format. As many of you know, PDF is the most widely used electronic document format for loan documents. So by migrating the to a specification that is going to be based on latest MISMO data standards, as well as the one that can support PDF format, we believe will be a huge relief from an implementation standpoint. So with most of the pieces that are needed in place are going to be in place very soon, we definitely have seen more implementations of e-closings and e-mortgages than what we have seen in the last, I would say 5 to 6 years. At this point of time, I would say there are at least, 6 to 10 active implementations from lenders of all sizes. Some are very large, some are medium-sized lenders, some are just community lenders. But the fact is that more and more lenders are actively implementing e-mortgage and e-closings, and so let's move on to the next slide, Raj. So one of the lessons we learned from the CFPB pilot is that all key stakeholders required in the e-closing process need to be engaged early on in the process. So when we talk to our sellers, we advise them to engage title agents. In fact, when we send them the questionnaires, we do collect information on which title agents are they working with, so that we are, the idea here is to make sure that the title companies are looped into the process early on, so that we can avoid the last minute frustration. And so while we try to do this, we have seen, based on some past experience, that some lenders, based on their speed to market demands, they still forget to, engage title agents until very late in the game. And what that means often is that because title agents were not, prepared to support the e-closing process, because they have to, train the closing staff on the system and things like that, sometimes the implementation is ultimately delayed. So the point I'm trying to make here is that because there is a lot of traction from lenders with regards to e-closings and e-mortgages, it may be a good idea for you all to periodically check with your lender partners to ensure that you are prepared and you are able to support their needs. So, and then we would also recommend some integration of title systems into e-closing systems, or maybe think of some solutions that where you could integrate all different pieces of the closing process into a common platform, so that you could minimize the training effort for your staff. And having such solutions, either maybe I'm talking about a couple of options here, and I'm sure there are more options there. One is the integration of title systems into e-closing systems, or maybe having a platform that would bring all the pieces together. Having some solutions like that would be much would make much easier for you to roll out this kind of process nationwide to all your staff, and with minimal training effort. So and then Freddie Mac and Fannie Mae have built out several materials over the last couple of years. We have definitely documents out in Freddie Mac e-mortgage pages, as well as Fannie Mae e-mortgage pages, that definitely cover our requirements for delivery and origination and servicing. But in addition, we also try to publish materials that cover the list of technology providers that are currently approved by Freddie Mac or Fannie Mae, and list of warehouse lenders that are ready to provide warehouse line. And we also have built some checklists that may be useful for you to look at. So please take a look at those materials and let us know any questions. On the screen we have my email address, as well as Fannie team's email address. Please reach out to those email addresses, and if you want to talk to any of us, definitely send an email, and then we will call you or talk to you and address any questions that you may have. So before I hand it back to Jeremy to open it up the line for any questions, I just want to thank all of you again for your time. And Jeremy, you want to open it up for any questions?
Yeah, thank you, Raj. Both Rajas, good information. We will open it up for Q&A over the next 15 minutes or so. Definitely an interesting topic. The questions are coming in pretty fast and furious. It's almost like we're holding a webinar on TRID or RESPA. I'll do my best to try and kind of manage all these questions. We do kind of have a wide spectrum. Just as a reminder, we can't really answer any regulatory or legal questions. No one here on the call is an attorney, so we'll have to address those questions offline. Raj, maybe you just want to recap again. Had a lot of questions about lists. Lists, whether who are the warehouse lenders that are buying that are in the market, and who are the lenders that are doing e-closings. I think you guys mentioned that this information is on your individual websites.
That's right. You want to take?
Yeah. So you want me to name those companies, Jeremy, or you want to just provide the link to the partners?
Yeah, I would just link to it. How many? Do you guys know how many there are? Is there a good number, and then people can go see who the lenders are?
We don't publish the list of lenders, but we definitely have published the list of warehouse lenders.
Okay.
So we have 9 warehouse lenders. I think I took a couple of names. Santander, which is one of the largest warehouse banks out there. We have Texas Capital Bank. We have Merchants Bank of Indiana, First Funding, Guarantee Bank and Trust. So all the complete list is in FreddieMac.com as well as FannieMae.com as well, and I'll be glad to send a separate link to those resources if that makes it easy for your members to find information.
Yeah. Okay. So you guys, yeah, there isn't really a list of the lenders that are doing e-closings though per se.
No, it's not public information because a lot of these lenders, as I said earlier, right, looking at e-closings as a competitive, advantage, especially because it impacts customer experience, and so we have not been given a green signal to go ahead and disclose that information publicly.
Okay, there. If you look on the screen there, Raj is kind of walking through where you can find this information on Fannie's website.
On the Fannie Mae. Yep, exactly. So on the Fannie's website, you can under the user help, we have the e-mortgage vendor list as well as the warehouse lenders funding e-notes lists there. We also have a list for servicers.
Yeah, Raj, can you do me a favor? Can you go to Freddie Mac website as well, just so that we can show that information?
Is it just e-mortgage after that?
Yeah, just type the keyword e-mortgages, or you can just click on the link in the slide. That should take you directly there.
Well, you guys are kind of getting that loaded up. Maybe another question that came in really focused on the technology, and I think you guys found in your survey of kind of what the major hurdles to complete electronic transaction for our members, the title and settlement space, was the frustration of having to integrate with many different LOS systems. Can you guys maybe walk through what you're seeing in the industry right now, and what are kind of maybe some technology that you're seeing that's being utilized?
Yeah, this is something that is still in works, but there is a technology that somebody is working on where they're trying to integrate the e-closing system, the title system, into a new system that is going to have all the closing documents and the title documents fed into one platform. So, and then that integration is going to be, extended to multiple e-closing platforms. So it's not going to just stop at one closing platform. So regardless of which closing platform that is the lender is using, ultimately that closing platform is going to integrate into this common platform where it brings all the closing documents into, and then it brings the title documents into, and so that the title agent has to just run one system in terms of navigating through and completing the closing process.
And had a few questions also. as you think about the entire mortgage transaction, and there's fear, for people in individual markets that the process becomes consolidated, and what is the role of the local title settlement agent and the local closer. From our perspective, the handling an electronic transaction is another tool you should have in your arsenal to be able to, at the end of the day, provide the services that the ultimate user, the purchaser, or who's purchasing the real estate or refinancing their mortgage, is delivering a service for them. Sure, there could be the fear of nationalization of the transaction, but at the end of the day, though, I think this webinar was aimed to educate everyone of what the landscape is, and also then to be ready for a transaction if your local lender wants to have an electronic transaction, that you're equipped and ready to deliver the service that's needed. Kind of a follow-up question though for the GSEs though, if you maybe you could walk through a little bit, because one question was that you guys were talking about the benefits for the lender, but could you share maybe what are the benefits you see from the consumer perspective?
Yeah, so I will start, and then maybe Raj and Raj can add more. So from a consumer perspective, the benefits we have seen, and this is also in line with what CFPB has seen in their e-closing pilot that sampled around 3,000 loan transactions, and some included traditional paper closings and some included e-closings, right? So the typical experience of a consumer that went through e-closing process is they're more informed because they have access to reviewing documents ahead of the time, and some e-closing systems have built-in help tools that can provide more information on each of the what do you call the numbers or fields that you can see on the specific document. So they are getting more information, more education, and because they have more time to review documents, typically they ask a lot of questions of the closing agents or lender, and then they are in one sentence I would say they're more informed. So they're more informed, so that reduces the time at the closing table. The other thing that is happening is some e-closing implementations have allowed, based on the lender's preferences, right, allowed the consumers to sign some disclosures ahead of the time. So they sign those documents before the closing day, right, so that the number of documents they need to sign on the closing day is reduced. So that directly translates into a much faster closing process. So Raj, anything to add?
Yeah, I would just say that the new set of the population that's going to be starting to buy houses are millennials, and if you look at that population, their expectation is a lot different than the previous generation, right? So while the paper process was okay for us, millennials are doing everything online and at the click of a button. So their expectation that this is archaic, where they have to sit down and sign 50 pages, is out of the question. So from a borrower experience perspective, I think this is key for title and settlement community to come together, because this is going to solve your consumers the way they do business with you.
All right, thanks, guys. Definitely wanted to touch on electronic notarization. And I know, Raj, during the presentation, you talked about there's a lot of movement, discussion in this area. And just from Alta's perspective, I wanted to mention that, or before I talk about that though, just someone actually mentioned it's important to point out that when we do discuss electronic notary, e-notary, it does not require the use of a remote webcam notary. And Dominic points out there is some confusion about the difference between the two. And at Alta, we're really trying to drive the conversation and the naming of this of remote notary, which is a vendor term, to call it online notary. But we've also had some people ask, where do Fannie and Freddie stand on the use of online notaries? Is that something you guys could comment on, or?
Yeah, let me address that, and then Raj can speak to Fannie position, right? So you are exactly right, Jeremy, which is, we are not necessarily thinking of electronic notarization as a process that can only happen online, right? I mean, that's not really our position at all. Electronic notarization is critical aspect of the overall transaction for us because that enables full paperless closing process, right? So it could be done face to face, it could be done, online, and our position is that if a state currently allows online notarization, right, we permit those transactions. So right now, Virginia and Montana both have laws on the books that permit online notarization. So we do permit online notarized documents in those two states. And as Texas, Nevada, laws come into effect next July, and then Ohio will be sometime this year soon, right? So as those laws take into effect, we start allowing remote notarized or online notarized documents in those states as well. So that's really our position currently.
And Jeremy, this is Mike from Fannie. Let me just jump in here quickly. Fannie's position is really very similar to Freddie Mac's in that in the states and jurisdictions where online notarization is expressly permitted, and as Raj indicated, that right now it's Virginia and Montana, but there are other states like Texas that have passed similar statutes that will be going into effect in 2018. That is permissible for loans that are sold to Fannie Mae, and in practice we don't have an issue with online notarization per se. It's the concerns are more about interstate recognition. If you have a borrower that's in a state, for instance, California, and the lender wants to use a Virginia online notary to notarize documents for a California borrower and a California property, and those sorts of situations are outside of our guidelines. And only under a variance would we permit that. But we are monitoring and developments in this area. There is a lot of interest around online notarization, and there are many states that are working on similar statutes. So we expect there to be a lot more dialogue around this, but we're just treading very carefully into that space.
All right, and that was Michael Cafferty also joined us with Fannie. And Raj and Michael, thanks again for joining us today and sharing your thoughts on the e-mortgage landscape and the GSE's views on this. Really good stuff. Again, trying to corral a lot of these questions. Getting back to the acceptance of the VA and FHA question, I'm trying to get back to it. Does FHA accept an e-signed mortgage with an ink note?
Yeah. As far as I know, Jeremy, they do, because they, I forgot exactly the mortgage letter number, but it was issued in 2014, and per that letter, they do accept e-signatures on all documents except note. So you could have a hybrid closed transaction that could be delivered to FHA per those, per that letter.
Yeah, I believe that's correct. It really, the ability to electronically sign the security instrument is more related to whether or not that can be subsequently electronically notarized and then e-recorded. It's more of a jurisdictional, state and jurisdictional issue. But in addition to the GSEs, FHA would accept that if it's permissible within that jurisdiction.
Okay. All right. We're going to take a few more questions. Then we'll wrap up today's webinar. Again, if we don't get your question, the contact information for Fannie and Freddie is on the slide deck, so please feel free to reach out to both their teams. This was from Alma, and she was hoping you guys could define, from your perspective, what the date of closing is.
I think that's probably in the context of uniform closing data set, I think. I would have to come back to you, Alma, after talking to UCD team in Freddie Mac. I don't want to give a definition that is not in line with the UCD team definition.
Yeah, I think I should have saved that question for later. You mentioned the uniform closing data set. Could you guys talk a little bit about that and where the GSEs are in the implementation of the UCD?
I think we are getting ready to, complete the implementation on the GSE side, and there will be again, I would have to check some dates with the GSE team because there is a specific team that works on it as far as the mandate date is concerned. But I think the mandate date is approaching very soon, within the next few months or so. But I think our GSE, especially Freddie Mac and Fannie Mae, the UCD teams are working with industry stakeholders on a regular basis, trying as we approach the mandate date for collection of UCD. And there are integration efforts going on with the Freddie Mac collection, uniform closing data set collection mechanism with several lender partners. So those efforts are in full swing as we speak. Not sure, Raj or Mike, can you speak to Fannie Mae efforts?
Yeah, unfortunately, I can't speak to specifics and dates because our team, Raj and I, are really directly related just to the implementation of e-closing throughout the industry. And so, although we're aware of those efforts, we can't provide specifics because we're not directly involved in those efforts.
Okay. All right, sorry about that, guys. You can go on Alta's website. We've written about the kind of the timeline for the uniform closing data set. So if you go to Alta's website, you can just do a search for UCD, and it should bring up the article. I don't know the dates offhand either. One interesting question. I don't know if it's interesting, but we do live in a world of acronyms, and we kind of assume everyone knows what we're referring to. But actually had a few questions on what is a GSE. So government-sponsored entities, Fannie and Freddie are both GSEs. Either of you, any of the speakers want to add a little bit more color on that?
I think you summarized.
Yeah, you summarized it. Yeah.
Yeah. I think that's pretty much it. I think, right? I mean, we are not really a government organization per se. A lot of people mistake us for the part of federal government, which we are not. We are private entities that are regulated by Congress, and right now we are under the conservatorship of FHFA. I think that's as much as I can, add color to this, what you already said, Jeremy.
Yeah. And just to wrap up, and maybe each of you would like to address it. It's a little bit of a forecast question, and maybe you guys could share, a little bit of behind the scenes of what, goals Fannie and Freddie has for the e-mortgage transaction. In 2 years, what would you guys like to see as far as the percentage of transactions that are, quote, paperless? I think
realistically.
Yeah. Go ahead. Realistically. Sure. Everyone would love, at the end of the day, okay, everything's paperless, just for ease and reduction of cost and reduction amount of paper that's introduced into the transaction. But, realistically, where do you guys kind of see the market going, especially in some pockets of the country that are really heavy on face-to-face interaction?
Yeah, I think I just want to clarify one thing before I answer the question. Face-to-face interaction does not necessarily mean that you have, to have, paper mortgages. We are not opposed to paper mortgages per se, right? Because we understand there are some demographics that may still want to do the old way, right? And there are some demographics that want to just do the, do the digital way, right? So I think just because somebody likes to do face-to-face, it doesn't preclude them from doing electronic transaction, because there are several states that do allow electronic notarization face-to-face. So in those states, you could still do a face-to-face transaction, but have a complete paperless transaction, right? That's still a possibility. And as far as the forecast is concerned, I don't have any crystal ball, but based on what I'm seeing right now, my personal, bet would be we would definitely see around 5 to 6% of originations happening, full paperless over the next 2-3 years. That's the viewpoint there, because there is a long way to go for some of these lenders to adopt, because they have some legacy platforms that they probably have to re-engineer. But what the point I was trying to drive earlier was that the adoption that we are seeing right now across all different segments is much more than what we have seen in the last 5-6 years. And that includes some large lenders, small lenders, community lenders. But in terms of the overall origination market share, I would, my most optimistic bet would be somewhere close to 5%, maybe less than, a little bit less than that. Raj, Mike, do you have any other thoughts?
What I would add there, Jeremy, is that we've been talking about this again for a decade and saying it's 3 to 5 years away for a long time. But it was clear that the GSEs by themselves can't really move the market. It's really some of the big aggregators in the industry, the big players that a lot of the smaller lenders sell to, that are aggregators that sell up into the GSEs. They needed to be ready to move before the industry can move. And now we've finally begun to see that momentum. Both Fannie and Freddie are working with some of the largest lenders in the country that are converting over to digital closings, or not just planning to, but actually beginning those implementations. And that's really what's going to drive the industry and the market. And so it's clear now we actually are at a tipping point. There's a lot of evidence behind that, and that's why there's this sense of urgency from the warehouse banks, from the servicers, from others, to be able to do this. But they can't do it without the support of their title and settlement partners. That's absolutely clear. So I know Raj said reach out to them, but the title and settlement community needs to understand what are the plans for their partners, what technology is going to be required to support this. How are they looking to train individual agents, and what role are they going to have, and really what are the impacts on closing and post-closing? Those are the discussions that you need to be having with your lender partners now, so you can prepare for this.
Yeah. Thanks, Mike. Great perspective. As you mentioned, it seems like more than a decade now. It's like, yes, this is the push for e-mortgages, and I think you're right. There is a renewed sense of urgency to get there, and great advice for everyone on the call on what to do now to reach out to your lenders. Well, both Rajas, Mike, thanks again for spending an hour of your day with us to talk about the e-mortgages. As a reminder to everyone on the call, if you missed parts of today's webinar, if you think others would benefit from listening, a recording of the presentation will be available for replay at alta.org/title topics after the file has been edited. Looking ahead to August, we will hold our second compliance webinar of 2017, and we will be focusing on another hot issue, wire fraud. We'll be outlining how phishing and wire fraud happens. We'll share examples of fraudulent emails to help you spot them. We'll provide info on how to develop a response plan if you're hacked, and then review the various federal and state requirements. And then we'll also recap the various resources that Alta provides to help its members raise awareness about wire fraud. With that will bring us to the conclusion of today's presentation. Thank you again to Raj J, Raj P, Mike as well for jumping in, for sharing your expertise in this area. I'd also like to thank Fidelity once again for sponsoring today's webinar. I hope all the listeners found today's presentation useful. Take care, everyone.
Thank you, guys.
Thank you all. Bye.